Hey there and welcome. Have you ever looked at a financial report and felt like you were trying to read a secret code? Well, think of this explainer as your official decoder ring. We're about to dive deep into the surprising and sometimes pretty deceptive world of finance to figure out what those numbers are really trying to tell us. So let's just start with a number, 38%. Any guesses what that is? That's the average score that a whole group of managers, people running departments, making huge decisions, got on a basic financial literacy test. Yeah, that's a failing grade, pretty much anywhere. Look, this isn't about pointing fingers. What this shows is a massive, widespread gap in how we understand business. See, the problem isn't that people are bad at math. It's that we've all been taught to see financial numbers as these absolute, unshakable truths. But the reality is so much more complex and, honestly, way more interesting. Because when you don't understand the numbers, it's very, very easy to be misled. Warren Buffett absolutely nailed it with this quote. The biggest heists in history don't happen with getaway cars and masks. They happen quietly, in spreadsheets and annual reports. And that's because numbers can be twisted and manipulated to tell a very specific and sometimes a completely false story.
Okay, so let's get right into the heart of it. Because to really get a handle on finance, we have to bust the single biggest myth out there. So forget everything you thought you knew about accounting being this boring black and white field.
The myth is that finance is a science, precise like chemistry or physics. But the reality? It's an art form. Every single financial statement you see is a canvas, and it's painted with layers of estimates, assumptions, and judgments. It's a portrait of a company, not a photograph. And these are the paintbrushes and tools of that financial artist. You've got creative depreciation, which is really just changing an estimate to make expenses look smaller. Then there are one-time charges, a handy way to dump all your bad news into one quarter to make the future look amazing. Revenue recognition games, that's about booking a sale before you've even seen the cash. And capitalizing expenses is a neat trick to turn a regular cost into an asset to boost your profits. Now, not all of this is illegal, but you can see how it can be used to paint a very different picture of reality. Here's a perfect, simple example. Imagine a company buys a new delivery truck. The accountant has to guess its useful life to spread out the cost over time. That's depreciation. Now, is that truck going to last 3 years or maybe 6? That's a total judgment call. But by simply changing that one single assumption from 3 to 6, you suddenly cut the expense reported each year in half. And that move alone can literally be the difference between showing a big profit or a nasty loss on the income statement. Same truck, same business, totally different story.
And that brings us to our next big idea, which is maybe the single most crucial concept in all of business finance. This is where almost everyone gets tripped up.
It's the ultimate paradox, right? You see the headlines screaming about record profits, investors are ecstatic, the stock is soaring, and then suddenly the company goes belly up. How on earth is that possible? Well, it all comes down to the critical difference between two words we tend to use as if they're the same thing: profit and cash. Here's the thing about profit. It's not real. You can't hold it, you can't spend it. It's a calculated number, an opinion crafted by accountants using a set of rules. One of those is the matching principle, where they do their best to line up the money a company earns in a period with the expenses it took to earn it. It's full of those artistic estimates we just talked about, like the lifespan of that truck. Cash, on the other hand, is brutally real. It's a fact. It's the oxygen a company breathes. It's what you use to pay your employees, to pay your suppliers, to keep the lights on. You can have all the profit in the world on paper, but if you don't have the cash to pay your bills, you are out of business. End of story.
The corporate graveyard is just littered with companies that learned this lesson the hard way. Remember WorldCom? They look like an absolute superstar, reporting billions and billions in profits. But it was all a house of cards. They were using accounting tricks to make profits appear out of thin air, but the actual cash just wasn't there. And eventually, the whole thing came crashing down in a spectacular way.
So here's the crucial point. You don't need to be a CPA or a Wall Street guru to see through these games. You just have to know where to look and what questions to ask. And the story of Sunbeam and one very sharp analyst is a total masterclass in this kind of financial detective work. This is just a brilliant story. So you have this celebrity CEO, Chainsaw Al Dunlap, and the company's profits look incredible. Wall Street loves it.
But this one analyst, Andrew Shore, looks past that shiny profit number. He notices that the money customers owed the company had just skyrocketed. So he calculates a simple ratio to see how long it was taking Sunbeam to actually collect cash from its sales, and what he found was insane. They were booking huge sales for barbecue grills in the middle of winter. They were just shipping them to warehouses, not to actual customers. It was a complete sham to create fake revenue. He called them out, and the company just imploded.
So what does all this mean for you? Because this isn't just about spotting the next big corporate fraud. It's about being able to make smarter decisions in your own work, in your own career, by truly understanding the story the numbers are telling.
The real superpower here isn't being a math genius or memorizing a bunch of formulas. It's about developing a questioning mind, a healthy skepticism. It's about learning to look at a financial report not as some sacred text, but as a story written by somebody with a point of view. And your job is to be the critical reader.
So here it is. This is your toolkit. First, just start with a little skepticism. Don't just accept the numbers, ask why. Ask yourself, what are the big judgment calls, the big assumptions being made here? And then always ask the killer question. Okay, I see the profit, but what's happening with the cash? Look for trends over several years, not just one amazing quarter. And finally, learn to separate the cold hard facts, like cash in the bank, from the educated guesses, like the useful life of a truck.
So the next time you look at a spreadsheet or an annual report, don't just see numbers. See the brushstrokes. See the choices the artist made. See the narrative they're trying to build. Because finance isn't just about counting what is. It's about telling a story of what could be. And now, you know how to read between the lines.